Hello, it is the 4th of January 2011. Welcome to today's silver analysis. I would like to start this video off by announcing that there will be a silver giveaway starting on Friday that will last 3 weeks. There will be the contest will begin Friday. It will be basically guessing the high, the low, and the close for silver for the next 3 weeks. So that will be available this Friday. So we'll now move on to today's action. And it finished off yesterday by finding support at this 5-day moving average. It had a very, very small bounce and it managed to gap below this level today and kept selling off throughout the day, managing to bottom at roughly 29 and 1/3. It came right down to this 20-day moving average, and this has been the backbone of this bull market. It's been going above and below the 5 and the 10, but it has not really went much below the 20. And this here, this is just a little small pierce below. That doesn't count really as a break of that level. And when we look at some previous resistance within the market, and the question is, will resistance become support? And we have this level of resistance, which ironically enough was also support. So now that the 5-day moving average is declining, and it's had a decline of about 1.5 to 2 dollar basis points from its high to its low, then it needs to find a way to correct this market either through time or just obviously lift off higher, because there could very easily be many rallies like this. And if that's the case, as long as this 5-day moving average is declining, then on the intermediate term, the sellers will be in control. Now, for the most part, during this entire run over the last 6 or 7 months, whenever it's been below a declining 5, it has represented great buying opportunities within the market. So the key thing is it's going to be a battle between this 5-day and 10-day moving average as a level of resistance. As far as support, right now it is at this 29 and a third level. If it goes below that, 28 in itself is a big number. It did actually touch it exactly on there within its previous lows. And then you also have this 50-day moving average, and they very easily could line up together if they meet up. I think just by looking at that, probably late this week would be where the 50 would meet up with 28. And that's what the intermediate term brings. So if you are looking to be buying, well, you got your first dip opportunity. And now what we'll do is we'll move this to the daily chart. And for quite some time, I've been talking about this 31.40, 31.5 level, which was 12 cents short of hitting. So therefore, it is a hit. And as of now, it is a small pierce below 31.40. As I was saying before a few weeks ago, as far as buying on the long term, this dip here isn't enough for me right now. I want to see a pullback down to 26.25, or I want to see confirmation of the breakout above 31.40. Therefore, it seems almost impossible that I could be buying anywhere in between the range of about 26 and roughly 33 or 34, because the odds do favor that you'll have some sort of pullback within the big Fibonacci level. Now, if you don't, then quite often that becomes a fast move in the other direction, because failed moves can very often bring fast moves in the other direction. So thus, if this isn't much resistance, then a failed move here of not stopping, roughly around 31.5, 32, would usually bring a fast move at least about $4 higher, if not even much greater than that. And we got some numbers as far as levels and dates. And we'll get to this 2934 and 1774 in a little while, but for now, I want to go over this 3128 and this low of 28. If we take the Fibonacci from that, in order to calculate this, what we can do is we can take the difference of the two numbers, which is $3.28. So we take 328. Now, if we want to calculate a 61.8% retracement to the downside, we'll multiply it by 38.2%. And if you want a 38.2% calculation, you'll multiply it by 0.618. So what we'll do is we'll multiply it by 38.2%, and we'll add this number to the difference of 28, which gives us 29 1/4, which is pretty much exactly or very close to where the market ended up bottoming during today's session. So thus far, this rally that started back in December is still successful. It needs to hold 29 1/4 for it to become that of a failed move. So there's more reason to state that the buyers are in control within this market. If we can draw a little trend line in here, it was a perfect hit within these different variables here. It's the first time it's touched this trend line since back in November. And of course, if it, like I say, if it does break, then the area that we'll be heading towards is between 26 and 25 as the most likely possibility. And if it does go 26, 25, it's still in a very, very bullish trend within the technicals and definitely within the fundamentals. So now what we want to do, or what I want to do here, is go back in time to November the 9th. And we topped at $29.34, and that brought us some major volatile moves. We're talking like 6, 7, 8% days, and well, today we had like a 4 or 5% down day, and you know what? That's not much, considering that we are not far away from having 5% down and up days becoming somewhat light as we move into the 10, 12, 15, 20% up and down days, which seem to be on the horizon very soon. But anyway, within this level here, as the market was selling off, I put out a little video here stating it's at 25, the odds favor it going higher. There were a few reasons, one of which was Fibonacci. And what we can do here is we can take this 29.34 level and subtract it from the bottom breakout of August the 24th of 1774. And when we do that, we will get a difference of $11.60. What we can do is we can multiply that by 61.8% because we want to do a 38.2% downward retracement. That gives us 7617, we'll say. Add the difference of 1774. And the price target was $24.91. And it hit 25 on the nose, right in here. So it was 9 cents off. Therefore, it's pretty much a Fibonacci hit. And the parameters would be a Fibonacci hit with a small pierce above the level. Just as right now here with the 3140, it's a Fibonacci hit with a small pierce below its level. And the one before 3140 was a 2135 top, which the Fibonacci was 2094. Back in the 08 top, you don't see it on here, but it was a small pierce above it. Nonetheless, what I noticed is a lot of times these Fibonacci levels just seem to work up coincidentally with all these big levels. After all, was it just a coincidence that this level of this top happened to be Fibonacci on the way lower? It was resistance on 2 occasions. Is that really a surprise? I don't know why it becomes such a coincidence, but instead of trying to figure out why, try to state, well, if this was a 38.2% a move towards the downside, what would it be if it becomes a 61.8% move? And for this, we can use some mathematics and figure out, if that's the case, where would that top be if 2491 is a 61.8% return. And to do this, we need to take the difference, multiply this by 38.2%, And when we get that, it would be within the difference of, what do we got here? 2491 subtract 1774. That number gets us $7.17. So therefore, within that, we can take $7.17 and divide it by 0.382. And if we do that, the answer that would come up would be 717 divided by 0.382. That would be 1877. What we do is we add it from the breakout low of 1774. And that gets us to 36, we'll say 50. So therefore, I know this may sound very confusing, but if this area is to become a 38.2% Fibonacci level, that means the top would be 3650. Ironically enough, this area would also become the 38.2% level. And that would be more important if we do get a bounce off this level and start to go higher. That most likely that the next level would be $36.50, because a lot of times, for whatever reason, it just becomes coincidental that these big levels are in fact Fibonacci support or Fibonacci resistance. So I'd like to thank you for watching today's video, and have yourself a great day. Bye-bye.